versus downtrends. I mean, I think that's where a lot of us are right now, saying, okay, for a lot of us, like myself, I've been buying the dip for months, not just weeks, months, if not for most of the year. And when we kind of vacillate between a double green and yellow, that's not so problematic, because the yellow is going to be influenced by the trend that came prior to it. And that's really it. We've talked about this concept many times. One thing you'll notice is there have been very few red grab candles. And this is the S&P we're looking at right now. There have been very few red grab candles. Red meaning that the candle is trading below the bottom line of the wave. Okay, so when we're below the bottom line of the wave, the candle is red. When we're above the top line of the wave, the candle is green. So having been in this area right here with the yellow, I'm still going to stick with what's worked. And think about this. Think about how many times. So this would have been 1, 2, 3, 4, 5. This is the 6th time that we pull back. 6th time. 5 previous worked out really, really well. Trend followers accept one last trend trade. You must. And trend followers also accept that the bulk of this move should not be undone by that. That's the risk, really. And what I highlighted is the top line of the wave to the 55 propulsion. There's nobody here, if you've been trend following, that should be wiped out by the sum of that. And, I acknowledge that for some traders, this might have been the first pullback within the life of the uptrend that maybe you took. That happens. That's some bad luck. But I'm telling you, if you play the probabilities of respecting the trend that was and expecting continuation and playing the market like it's more likely to continue than it is to basically capitulate, you are going to be on the higher probability side of the market most of the time. That's my career. I've just described 3 decades of my career. All right. So this isn't about one trade. It's not even about this week's trades. It's about month after month after month of basically sticking to the formula. But right now, we have to acknowledge that we see that even the NASDAQ, which has been the most resilient, is breaking. So again, after today's session, the question of how much more downside is there and is it buyable is actually a really timely one. So let's talk about the formula for a trend. And this is really important. I want everybody to know this. This is one of those things where I want everyone to understand. So let's go into it in detail. It's really simple. One red grab candle cannot make a downtrend. So let's not even talk about downtrends when it comes to the NASDAQ. Okay? Also, notice that as of today, we've actually from the top of 9.7 at 9.7 high, we've actually today corrected 5%. That's a 5% move. We have yet to take out the dip from August or July. We're still above those levels. And I think probably most importantly, we have taken out the 55 EMA. So if you're looking for some differences in this particular dip as opposed to the others, these held their 55. So there are some differences, no doubt. And then this candle gets a lot of attention. This candle has broken an uptrend and we are now in chop. Within the confines of chop, what you have now, really simply, is a level of support, potentially, and a level of resistance, which means that, this is your kind of resistance area up in here, which means that we are now in a distribution market trend. All right, this is distribution, which is not going to fit across here, but you get my point. This is now distribution. And this is when you pull an indicator like a slow stochastic or a ready aim fire or my V-score and say, all right, are we nearing some sort of oversold support level? I'm not asking myself, where do I short? I'm still focused on the long side. Why? Because we need at least 8 to 10 of these things to say that all of this is reversing. Isn't it amazing that a multi-month run-up, yeah, it can be broken in one down candle, but is that one down candle now a downtrend? No way. I'm going to wait for the market to prove to me over a minimum of 8 to about 10 sessions that the bearish organization is something more than distribution and actually has the chance to become a downtrend. That's so important. And so that contrast leads us to the Dow. You got to be specific about the index. NASDAQ, nowhere near a downtrend conversation. But what about the Dow? Today is actually the 8th candle, the 8th red grab candle with propulsion dots. So if we're looking at a potential downtrend in any of the indices, the conversation begins at the Dow. And then if you're thinking to yourself, well, are we necessarily just done in terms of now it's a bearish market? I would say no. There's really two things that have my attention. One is the 200. It's the 200 exponential via propulsion. Number two, our previous minor low patterns that qualified as Darvis levels and that area. And isn't it interesting that overlaps with that aforementioned 200? So if we're going to be sort of south of support, think of this as the equator. If we get below this level, the sentiment will shift significantly. But if we are able to stay above that level, there is going to be sort of this base of overall bullish opinion that will continue to sort of affect what traders and investors think of the Dow. And then we can start getting more granular to sectors and stocks. Okay, so if we contrast these, this is not a market-wide, look, it's a market-wide sell-off, but it's not equal in terms of what individual trends are telling us about tech versus S&P versus Dow. Please keep that in mind. Is it viable? It's still, yes. I mean, more so in NAS than the S&P, and more so in the S&P than in the Dow. But I'm still not telling you that the Dow is in a downtrend that's completely confirmed yet. If we break the 200, that'll be a different conversation. And today the Dow too took out the 5% level from the recent high as it moved lower. So that's a 5% move from recent highs that we have now seen. And ask yourself this, how many traders and investors? Because remember, we don't want to just map to trading behavior. We need to ask ourselves where investors may step in too. Could investors, after a significant sell-off, say, well, this is the sale I've been waiting for? Don't underestimate that, but we'll be looking for some specific chart patterns that I'll describe in the premium video to confirm that that is indeed the thinking, that my hypothesis has some traction. All right. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.